I think it's just some usual profit taking. We had through the end of last week, it was the best November since 1928. And if we still are climbing by 10% by the end of today, it will be among the three best since World War II. And whenever the market was up by 5% or more in November, the market was below average in December. Also last week we had the Dow, we had the S&P 500 and the Russell 2000 hit all-time highs. And on average in the following 1 month period, basically the market went nowhere, and the frequency of advance was a coin toss at only 50%. So I would tend to say that the market got ahead of itself and is now going through a usual digestion process. Well, I think that we'll still end up with a positive December for the U.S. stock markets. And maybe we do have some challenging trading periods in the first quarter because of the worries about COVID and just how high the case numbers go, et cetera. But I believe that now the vaccines are being distributed. Once we can get the majority of the populace to take the vaccine, then I think analysts will be more optimistic about the second half of 2021, and we see a ramp up in growth expectations as well as price appreciation. Well, I think it all depends upon your time horizon. If you are looking 1 quarter out, then maybe the market is a bit optimistic because we won't have enough vaccines sent around the country. We won't have enough people having taken the vaccine. We won't know enough about how it works beyond the phase 3 trials that we've been hearing about. So you're correct that we have to wait and see how it works with the general populace. At the same time, we could find out that the virus itself morphs into a new stage. So there are a lot of what ifs that we just don't know about, but I think Wall Street is going with the odds, and the odds are that we do send out the vaccine. We do encourage people to accept the vaccine, and then that will help to reopen the economy probably in the second quarter, and then start to see a ramp up in GDP and earnings growth expectations for the second half. Well, when you think about what is a safe bet, you think about those companies that have consistency of raising earnings and dividends, because that's the reason that investors invest, is to get a cut of the profits, if you will, through a growth in earnings. And that growth is either reflected in the distribution through dividends or the increase in share price. So I would say that if you are an investor who are concerned about the future and maybe Wall Street is ahead of itself and so forth, then I would look toward those companies that have an A-, A+ ranking by Standard & Poor's, which shows the above average consistency of raising earnings and dividends over the last 10-year period, and then make sure that those companies can pay their dividends if we do see a decline in earnings. So make sure that the payout ratio is less than 80%. So I would stick with stocks, but look for those that have low beta, look for those that have high quality, and over the longer term, you'll probably be able to sleep at night a little bit better. I think certainly companies in the healthcare space are likely to do relatively well as we continue to focus on COVID. One of those areas, Thermo Scientific, TMO, is a company that we have a strong buy recommendation on, found in the life sciences and tools category. This is a company that does engage in testing, and we think will be in demand for many months to come.